Now, Tom, you've spent some time concentrating on the inflation's downward trend. In terms of the official readings, things have recently gotten a little complicated. Scott is discussing the possibility that it will perks up once more. What do you think will happen next? The Fed, in my opinion, is confident that there won't be a significant spike in inflation that would force us to hike to emergency levels. However, I may somewhat disagree with these reports because, as you can see from the most recent PC report, magazines accounted for about 25% of the inflation for the month. So is that reproducible? Because that was the largest monthly increase in magazine costs in the past 70 years, correct? Yes, it is correct, although you may often select an outlier on a monthly basis. Therefore, I believe that the other aspect of it that may have lasted longer is the existence of portfolio management fees, correct? In other words, when the stock market rises, you sort of assume that portfolio management fees, which are actually paid for by no one out of pocket, are also rising. It's one of those amusing situations when you're asked, how much do you want to focus on that? Yes, and the fees are deducted from your profits. That's a wonderful point because it's not coming out of someone's wallet. In the end, I believe that consumer expectations of inflation have remained rather consistent, and I believe that the Fed is more concerned with that. Additionally, I believe that the Fed is still dovish, even if it just makes one cut next year. In fact, it is bullish because it gives us much more fuel. Indeed, historically speaking, you don't want the Fed operating in emergency mode. And as I keep saying, I believe you only received 2 or 3 edits from 1995 to 1996, and they were put on hold for long. It went well. Stephanie, I'm curious about your vantage point and how you see individual investors' actions and how they prioritize the flow of their funds. And I say it at a time when it does appear that some segments of the market are experiencing a resurgence of activity. Favorites among these retail traders are once again in high demand, and this notion that, of course, might last for a long if we are in an atmosphere akin to that of higher animal spirits. Yes, I believe that our customers tend to hold key positions in the things that they are familiar with and utilize. Therefore, a portion of that does end up in that tech-focused, large-cap sector. However, they also have a tendency to trade around instability. We're in a terrific position to achieve that, in my opinion, as there is more stock dispersion, which should be advantageous to our customers. They have been making a lot of money under names like Tesla in more recent times. Then, since Nvidia hasn't been doing as well as some other names, you see them investing in them. Naturally, they have also been fans of MicroStrategy. However, I do believe that the settings should be advantageous for their behavior and the location of their operations. They aren't selling on a net basis, though. Indeed, that makes sense. Here's one last thing, Scott. Stephanie brings up MicroStrategy after all. As I've mentioned, the recent surge in Bitcoin and cryptocurrency has caused a slight coattail effect among certain connected stocks or high-risk, high-reward scenarios where it appears that hot money is getting quite enthused. Are you afraid of that, or do you believe you can control it? Well, Mike, I believe that every time you've watched the stock market rise from the lows of October 23 to its current position, that's a significant shift in just a single year. The fact that many of these other high-risk investments have also increased in value doesn't surprise me. That indicates to me that, given the strong momentum in this market, we most likely have some more upside ahead of us in the near future. However, it also indicates that, as I have stated, we might have a chance to go forward. I don't like to chase the S&P 500 at this time. However, the financial, industrial, and communication services industries appear to be respectable. We enjoy energy and oil. I believe there are several sectors you can work in right now because oil is always at $65 or $70, which it is. When people start to feel a little anxious about the Fed and possibly about the potential consequences of tariffs and other similar measures, I believe those opportunities will show themselves. We are therefore anticipating 2025, which I believe will ultimately be a successful year. Gotcha, Tom. I am aware that you have clearly been optimistic about Bitcoin. Clearly, it has been on this amazing run. All I can think about is the growing amount of round numbers. We have 45,000 on the Dow, 6,000 on the S&P, and 100,000 in Bitcoin. It seems as though we have the capacity to make people say, Wow, we made it. Is that an issue? Indeed, perhaps we are in a simulation. Well, there you have it. The fundamental arguments for Bitcoin, are even stronger now than they were at the beginning of the year because, in my opinion, we've moved past significant regulatory obstacles and governments that may be hostile to the United States, making this a strategic sovereign asset at a time when it has once again shown itself to be a decent store of value, regardless of whether you consider 3, 5, or 10-year timeframes. As you are aware, the network value of gold is $19 trillion, whereas the entire worth of Bitcoin is $2 trillion. Therefore, Bitcoin has a lot of potential for growth. Okay, so let me use that opportunity to remind you that whenever we discuss the fundamentals of Bitcoin, we are really just discussing supply and demand. It seems technical to me. More people can purchase more of it in more ways. Yes, but really that's how you talk about dollars, isn't it? Since $1 can be exchanged for another dollar. Of course not, but it is based on economic processes and such. Okay, we will absolutely talk about this topic again. Thank you so much, Scott, Tom, and Stephanie. Have a wonderful weekend, everyone. I'd appreciate you being here with me on this. Angelo Lozino, Senior Equity Analyst at CFR Research, joins us today to discuss NVIDIA's quarter in further detail. It's wonderful to see you, Angelo. Listen, so NVIDIA reports. It should come as no surprise that we're bouncing around here after hours. But tell us how you feel about the print right away, Angelo. Thank you for having me, Thus, in my opinion, the quarter appeared to be excellent. Going into the print, I believe we were looking at $33 billion. The company's guidance was $32 billion a few months ago, and the numbers were gradually increasing as you can see in the print. Then they revealed a figure that was, I think, roughly $2 billion higher than what was anticipated. I would say that the advice was obviously above our expectations. Please let me know if you need any changes or if you want me to continue.